Morning. Yeah, so good morning, everyone, and welcome to our webinar this morning on an introduction to finance for boards. So this webinar is being run by the Wheel as part of Charity Trustees Week 2024. So there's been a host of sessions and events all throughout this week. All of those have been recorded, and you're more than welcome to view those back. They're all on the Charity regulated website, and I'll share a link in the chat and afterwards as well, so you can look back on a host of events that took place this week. And just a couple of quick housekeeping bits. This is a webinar, so you can see and hear us, but we can't hear or see you, so there's no issue there. Any thoughts, comments, just want to say hello, feel free to use the chat. And if you have any questions, there's a Q&A button down below as well that you can submit questions in. And of course, this has been recorded and we will be sharing it with everyone shortly afterwards. If you miss anything, it'll all be with you later. That's all from me, so I'll hand you over to Andrea now. Thanks so much.
Thanks, Matthew. Hello, everybody. You're all very welcome for this hour and a half. I think we're together to talk about. It's an introduction to finance for board members. So by its nature, it is an introduction. I'm not going to be going into, hopefully it'll give everybody a really sound overview with regard to the implications for board members in charities. But I'm quite sure that I could talk for days about finance in charities, and fortunately I enjoy finance. I knew I wanted to be an accountant when I was about 13, which is sad or encouraging depending on your point of view. So what I'm going to talk about today is really sort of setting the scene in terms of sort of the framework. And also I'm going to be touching on Charities Governance Code, which of course is part of the charities regulators requirements. I'm going to touch on financial management as well, and a couple of other things just to give you hopefully a sound sort of overview in terms of finance for board members. I have a presentation prepared, so I'm going to go into that in a second. As Matthew's already said, if you have any questions, please do pop them into the Q&A or into the Q&A box at the bottom. And I'm going to get started now. So I'm going to share my screen, which hopefully is going to work without any issues. I think it's fine. Okay. So as I said already, I'm actually an accountant. I'm a chartered accountant, and I qualified quite shockingly over 40 years at this stage. But I've always really enjoyed finance, and it's something that I understand a lot of people don't like very much, and they feel quite concerned about. And I want to start off just by showing you the results of a Mentimeter for a presentation on finance for non-financial people that I did for the Wheel last year. And this gives you, this certainly gave me a good idea as to the kind of concerns and issues that people who are board members think about when they think about finance. So I asked the question, when you hear the word finance, what do you think of? And this is the result from the group of people who were actually at that particular webinar. And I'm pulling out a few things which I think are particularly, everything that's here is obviously relevant, but there are a few things which really struck me as well. And I believe that these are probably the kind of things that people who are here today are probably thinking about when they think about finance. As I say, picking out a few of the words: complicated, compliance, accountability, which I think is a great thing, because obviously all charities have to be accountable, and exercise good governance. That's another thing which came upon the results as well. A couple of other things: anxiety, fear. They're things that clearly some people do feel, that they feel anxious when they start thinking about finance. And they're quite fearful of it, maybe because they don't have financial knowledge themselves. Other items: lifeblood. It's lifeblood of the organisation. And I think that this is an opportunity for me to say to you that finance is a necessary evil in charities. It's a necessary evil in all organisations. But the reason why charities exist primarily is to provide services, to provide charitable activities in accordance with their constitution to their beneficiaries. And finance is an extremely important part of that, because without finance, you probably couldn't deliver those services. However, as I say, it's not the prime reason why you exist as a charity. This is why I say it is a necessary evil. And people, as I say, the words there were anxiety, fear, risk was another thing which came up. Lifeblood, it is the lifeblood of any organisation, it's finance. It's essential, of course it is, as I've already mentioned. It's about sustainability. You need finance in order to sustain the organisation. It's about staying afloat. That's another of the things which was said by the group of people who were at this particular webinar. It's about rules. Of course it is about rules and controls. Potential headaches is another thing which came up. About resources. And I would actually just say here that the resources of the charity go beyond finance, but finance is a very important part of the resources, and it's part of the duties of the trustees of a charity to make sure that the resources are available to actually meet the plans of the charity. And the thing which it's about returns, as I say, potential headaches for something came up. If I'm repeating myself, I apologise, but there's quite a lot here that I think is very, very relevant. And then the thing which I think is the one thing that I pulled out of here as well was critically important. And I think that's absolutely valid comment to be making. It is critically important to make sure that the finances are in order. And what I would say to all charity trustees is that if you are a charity trustee who does not have a financial background, what I'd say to you is do not rely exclusively on the financial people who are on the board. Yes, tap into their knowledge, tap into their expertise, but there is a duty for all charity trustees to understand enough about the finances, to actually look at the finances and draw appropriate conclusions. You can't just pass that on to the other trustees. And it's very important, I think, if you take nothing else away from today other than this, you are absolutely entitled as a charity trustee to ask questions so that you do understand the finances. And hopefully you'll have systems in place at your charity so that you're being provided with management accounts on a regular basis to all board members, so that you can actually manage your resources, manage your financial resources in particular, on the basis of sound financial stewardship. And I would hope that all management accounts and packages which are distributed to board members include enough of a narrative to give the backbone or the information with regard to the charity's finances. But as a charity trustee, it's very important that you actually look at that information, ask questions if you need to. If you have an audit finance subcommittee, that's grand, because they hopefully will have asked a lot of the questions that come to your mind prior to the management accounts coming to the board. If you don't have a subcommittee, and a lot of charities, in fact, the vast majority of charities here in Ireland are reasonably small, then you might not have a subcommittee who's actually asking those questions. But as I say, it's important that you feel comfortable with what you're looking at, and that you feel comfortable and encouraged to ask questions to make sure that you do understand what you are looking at. And as I say, that's really important to me, that you actually do understand and that those questions have been asked. So you're making decisions based on sound understanding of how things are within your charity. It's concentrating, of course, on finances today. So I'd imagine, although I might not be correct, that there won't be any surprises in this particular feedback. Now, I always think, well, what do I think about as well when I think about finance? And I do think about the things which are on this slide. However, what I also think about is art, which is in Siena in Tuscany. And this reinforces, again, the importance of financial records and accounts, because different areas in Italy claim that they invented double entry bookkeeping, which of course is the basis of our modern accounting records. When I was training, Venice was the one who was coming out front as being where it was invented. However, Florence also claims it, and indeed so does Siena. And I think it's actually quite interesting that Siena thought that the records of Siena were so important that they commissioned an artist, a preeminent artist, to paint the covers for their records every year it was actually from the 13th to the 14th century. And this is an example of a fairly early one. And it's the painted cover of the records for Siena, and it was painted back in 1258. And I think this, to me, indicates just how important the accounting records were considered to be by Siena, that they would have actually produced these books and they would have engaged the services of a preeminent artist to actually paint the covers. This is actually a monk who's actually recording some of the accounting records there. And if you are in Siena, I've been there a couple of times, there is actually an exhibition in the local authority offices. And it's actually quite interesting to go there and to see all these fabulous works of art, and to actually touch base with the fact that certainly Siena thought it was very important to be producing these accounting covers. And over time, of course, these things have changed. So if you do go to the exhibition, what you'll see is that there is beautiful hand-painted covers. Then you progress where they started to produce paintings. And then, of course, you get a bit further along where you have bound accounting records in similar to normal bound books. And then the last time that I was there, you'd also see the piles of printouts on the floor in the corner. And again, for me, it's much more exciting to see the art covers and even the bound books rather than the dot matrix printers. And no doubt it's changed now, that most things I would imagine are actually held in soft copy on computer. But I find this interesting. And this to me is one of the reasons why I find accounting so interesting and finance so interesting, and indeed artistic as well. So I thought that might be interesting to people. So there's a question in Q&A. Just everybody saying good morning, everybody. Okay, so moving on more then to the more nitty-gritty part of finance. I just thought it would be useful again just to actually explain the difference between the role of the board, the role of the trustees, and those two terms that for registered charities kind of slot in with one another. If you're a company, you may call yourselves a board, you might call yourselves a committee, you might call yourselves managing body. But as far as the charity regulator is concerned, all of those people are the charity trustees. So it's the role of the charity trustees, and I'm going to compare it here to the role of the CEO or manager of a charity. The role of the board, role of the charity trustees, is to exercise control over the charity, legally responsible for the management of the charity, and control the major decision making. And it's very important to be aware of the fact that as a charity trustee, you cannot delegate that responsibility. Ultimately, the responsibility for the charity lies with the board of trustees or with the trustees of the charity. The role of the manager or CEO is different in that the board or trustees may well delegate day-to-day activities to a manager or to a CEO. And the responsibility of the manager or CEO is to implement the strategy and policy within the authorized delegated by the CEO, to the CEO by the board or by the trustees. And it's important to be aware of this because there is a difference in the role. The CEO or manager is given particular authorities which are delegated by the board or by the trustees, and they're accountable to the board, when they exercise this delegated authority. So there's a responsibility for the CEO or manager to report to the board as to their activities and the day-to-day activities of themselves and their team. Generally, there would be matters which are reserved for the board. So I'm talking here exclusively about finance and risk. There are other items which are reserved for the board as well, but this isn't coming up today. Approval of the budget for the year resides with the board. It's up to the trustees to actually approve the budget, the annual budget. Generally, you'd have a situation where the board must approve a single budgeted item over a particular value, and that will be in accordance with your financial policy and procedure. Expenditure on a single non-budget item over a certain value as well, and again that would be covered by your financial policies and procedures. If you have multi-annual service contracts that have been provided for in the annual budget, again there'd be a particular value there which would be for the approval of the board. And I'm saying the board, I'm saying the trustees rather than the audit or finance committee if you have one, because the audit and finance committee might well have experts on it who are not board members, but in any event, they have certain terms of reference, and what they would be doing is being accountable to the board as a whole in their own activities, and it would be board responsibility to be approving any expenditure in accordance with finance policy and procedures. Some of it, delegated authorities may well be given to managers or CEOs or other members of staff as well. But as I say, it's up to the board to approve the financial policy and procedure. It's absolutely essential that they review financial policies and procedures and that the formal sign-off is done by the charity trustees or the board of trustees. If you have investments, it's up to the board to approve the investment policy and any investment decisions where the sum involved says in excess of a certain amount. And again, that would be included in your investment policy, which would be cross-referenced to your financial policy and procedures as well. It's up to the board to approve the reserves policy. And in fact, that's all of the policies have to be approved by the board, of course, but I'm drawing particular attention to the reserves policy here. And when we start talking a little later in terms of what's coming down the track, the charity's statement of recommended practice or the charity SORP will at some stage become compulsory here in Ireland. And within the charity SORP, you have to have a reserves policy. It's a requirement of the charity SORP that all charities have a reserves policy, even if that reserves policy is to say that their policy is not to have any reserves, which I think is not of my own opinion, it is just my opinion, is not as financially prudent as having something in reserves, because I think that you do need something there in terms of exercising sound financial stewardship. But again, going back to other matters reserved by the board, the Directors and Trustees report or Trustees report and the annual audited financial statements are signed off by the Board of Trustees, and the risk register and risk mitigation measures are the responsibility of the Board of Trustees, and it's also up to the Board of Trustees to be signing off on that, having reviewed it, and to be minuting that within one of their whichever board meeting or trustees meeting that this is discussed. And good governance is to make sure that decisions are appropriately minuted in the minutes of the Board of Trustees when they hold meetings. Okay. So these are some of the matters reserved for the board, and these are the particular ones which relate to finance. Now, moving on to the legal duties of charity trustees. And again, what I'm focusing on today is the financial part of that as opposed to the non-financial. But everything that's listed here is extremely important, of course. Managing your charity's resources responsibly is one of the things which has financial implications, because your resources, as I said already, it's not just financial resources, it's also the non-financial resources, which are so important. And being accountable, complying with the law, acting with reasonable skill and care, and also acting in the best interests of your charity and ensuring that you're carrying out charitable purposes for the public benefit. These are the 6 legal duties contained within the Charities Governance Code. Just going to check the questions and answers, Q&A. Somebody's asked, does the SORP and its regulations only apply to larger charities over a certain income? When it becomes compulsory in Ireland, the expectation is, and there's a section here in this morning where I'm going to talk about the SORP a wee bit, but the expectation is that the charity SORP will apply to all charities where their income or the expenditure on an annual basis is in excess of €250,000. That's the point at which charities will have to comply with the charities SORP. It is best practice. It's been best practice for many years. Some charities already comply with the charities SORP, but more of that later on. Okay. So this is a slightly different way of presenting that slide where it's the same headings, but I just want to draw attention to the fact that managing your charity's resources responsibly, there's a euro sign there, which kind of gives you a bit of a heads up that there is financial implications included here. And the specific items which are listed underneath that particular section is that you manage your charity's resources responsibly by planning your budget, agreeing the short, medium, and long-term financial needs of the charity. You develop and implement a plan to ensure the continuance and growth of your charity. And of course, you'd be building into that plan financial information as well. Identifying and managing risks. And of course, financial risks would be quite prominent, I would have thought, or would definitely would be featuring around on your risk register. Ensuring that there are appropriate financial controls and procedures in place. And we'll talk a bit more about that later on. But that is extremely important to make sure that you have in place the appropriate checks and balances, which is another word really for financial controls, and make sure that you actually have those in place. But not only do you have them in place, but you actually make sure that they're adhered to, because you can have fabulous policies and procedures. You can have a fantastic financial policy and procedure, which includes all of those controls. However, if you don't actually operate within those controls, then really that policy isn't worth a great deal. You have to make sure that you adhere to, and I'm going to say again, sound financial stewardship. And again, making sure that all staff and volunteers understand their roles and responsibilities. I'm not going to go through the rest of these because this is the main one, which is relevant from a financial point of view. Okay, just checking again. There's another question which has gone up. I'm going to check them as I go along. No, it's Charities SORP, not Thorpe. So it's the Charities SORP, SORP is the Charities SORP. Okay. Sorry if I'm pronouncing things incorrectly. Okay then. So I want to talk a little bit about the Charities Governance Code, and again, pulling on a little bit more in terms of exercising control. And there's also within finances being accountable and transparent. So I want to talk about both of those areas. And the Charities Governance Code it was 2018 when it first was published. 2019 was a year of getting sort of familiarizing yourselves with it. 2020 was the first year when you would have been expected to be starting to put everything in place. In 2021, you should have had everything in place. And of course, you report to the charities CRA each year with regard to compliance with the Charities Governance Code. And there are about 11,500 charities at the moment, registered charities. And one of the feedback which comes back time and again from the charity regulator in their annual report is that a lot of charities are not reporting full compliance with the Charities Governance Code. And many charities are actually, when they make that annual return, they're reporting that there is partial compliance, they're partially compliant with the Charities Governance Code. So I understand that the charity regulator is now starting to follow up and do, I'm going to use the word audit, but it's not a full audit, it's not an audit in that sense. It's actually checking compliance of charities with the Charities Governance Code. And I think that they're still being sympathetic with charities' needs to actually put themselves into a position where they are actually fully compliant. But as I say, there are quite a few charities which are not fully compliant as yet. So it's a good idea if you can get everything in order, because again, this is one of the responsibilities of the board or the Board of Trustees, is that the board sign off on that report to the charity regulator each year. Each charity makes an annual report to the charity regulator and must do so within 10 months of the end of the accounting year to which that annual report refers. And it's very important that the charity trustees actually know what's being returned in this regard. The report itself goes beyond just compliance or non-compliance with the Charities Governance Code. However, it's very important that the trustees actually see what's being returned on behalf of the charity and approves what's being returned on behalf of the charity with regard to the Charities Governance Code. And of course, the trustees must review the contents of the compliance document and make sure that the compliance document for the Charities Governance Code is updated on an annual basis. And again, they should make sure that approval of the Charities Governance Code compliance document is discussed at a meeting of the Board of Trustees, and also that is minuted within the meeting notes, and that they've approved what's being filed on behalf of the charity, the annual report in its totality, but also with regard to compliance with the Charities Governance Code. So somebody has asked a question here, which is in light of the recent case where 2 directors asked to help a charity were brought to court. That's a few years ago, I think, is it, where this came up? What's the extent of liability for trustees? I'm going to come on to the legal responsibilities of trustees in a few minutes' time, and I'm also going to go through some of the penalties for non-compliance, which I hope is going to answer your question. Okay. So back to the Charities Governance Code. I actually find that if I answer questions as they come up, it's more timely, which I hope is okay for everybody, rather than leaving everything to the end. So now moving on. So I just thought it's important to pull out Principle 4, which is the exercise and control from the Charities Governance Code. And when it comes, the Principle number 4 sets out 3 items for the non-complex charities: abide by all legal and regulatory requirements, consider and reduce risks, and exercise proper control. And then going into that applies to all charities. Then moving into the core standards, which apply to the non-complex. I'm not going to go through every single thing here because I'm concentrating on finance this morning, but I'm draw attention to 4.3 that if you raise finance or if you raise funds from the public, you must make sure that as trustees you read the charity regulators guidelines and you make sure that the charity adheres to them insofar as they apply to your charity. And again, I think it's a good idea for all charity trustees to actually read this if it's applicable to you. And then, of course, you'll have a policy or compliance policy behind you as a charity as well. Make sure you have appropriate financial controls in place. I'm going to come on to that in a moment or two as well. Identify any risks your charity may face and how to manage these, how to mitigate them, how to reduce them, how to actually bridge that gap is very important. And you also have to make sure as charity trustees that you have appropriate and adequate insurance cover in place. So these are the core standards which apply to all charities. Then moving on to more complex charities where the additional standards are listed. It says under 4.7, have written procedures to make sure you comply with all relevant legal and regulatory requirements. I actually think that having written procedures is a good idea anyway. They don't need to be complicated. However, they do need to deal with the most important points. With regard to financial procedures, I think it is really, really important to have written procedures in place, because then everybody knows where the boundaries are. And what I have found in practice, just after I qualified, I was seconded to one of our clients because their bookkeeper stroke accountant had actually gone off on sick leave and never to return to the organisation. And the poor man, it was in the days when a lot of accounting records were being computerised and the software packages were first coming onto the marketplace. And he couldn't cope with it. And I don't think he had as huge a support from the owners of the business. It was actually a private company who reconditioned waste products to create wool to make duffel coats with. And so it was well ahead of its time in terms of recycling, I think. But there were no written procedures. So somebody going in there trying to keep the accounting records up to date and bring everything up to date and manage the finances was incredibly difficult because people didn't know where to start. I suppose by tapping into the auditors, where the auditors had where we had a record from our planning documents that at least did give the organisation a start. However, if there'd been a written policy and procedure, it doesn't, as I say, it doesn't have to be complicated, but if it had been even in bullet point form, that would have made the transition an awful lot easier and actually picking it up and sorting it out. And of course it was sorted out because that's had to be done, but it would have made it an awful lot easier. And then again, you have to have a formal risk register that is reviewed regularly by the board of trustees. Okay, then consider adopting additional good practice. I'm not going to go into those because again, I just want to draw on the financial pieces today. There is something in the chat box. Yeah, it came up recently in the RTE program. Yeah, okay. I believe that, and again, I believe that there are legal changes with regard to that to protect people in that regard, if they are called in by the charity regulator. Now, again, discussing the financial responsibilities and duties of board members or trustees, two prime pieces of legislation, which are the Charities Act of 2009 and the Companies Act of 2014. So, the Charities Act of 2009, there's a duty to keep what they call proper books of account, and I'll come in a moment to explain what's meant by that. Produce an annual statement of accounts, annual audit or examination of accounts. The legislation is contained within the Charities Act, or more relevantly, it's under the Charities Amendment Act of 2024. Regulations with regard to the audit or examination of accounts. The Section 50 is requiring an audit or examination of accounts, and then annual reports, which are the annual reports to the charity regulator. Somebody's asked, do I have a sample document of statement of practice for finance? You're talking there about policy and procedure. I can certainly make one available. I'll send it on to Matthew afterwards. And there's a couple more things in the questions. I'm just going to have a look at those while we're here. Yes, somebody has said that it is a requirement of that boards have a treasurer who's a board member. Is it a requirement that boards have a treasurer who is a board member, or can treasury services be provided by external organisation? And then again, I think that some constitutions indicate that you must have a treasurer as one of your officers of the company. I think that the important thing is that you actually have a board of trustees who reflect all of the skill sets which are required by the charity, and that includes people on the board of trustees who have financial experience or financial knowledge. Some charities do outsource their accounts production and in fact their bookkeeping to external service providers. That's fine, so long as you actually do have appropriate terms of engagement with them, and it sets out clearly what the responsibilities are and what the controls are. That does not mean that the Board of Trustees just hands over all responsibilities from a control point of view. You need to make sure that there are appropriate controls in place for the board, so that the board is actually making sure that they review what is produced by the external service providers, for example, and make sure that they still seek explanation as to what's in the management accounts, for example, to make sure it stacks up and it makes sense, to make sure that if there is an income and expenditure account provided, which there would be, obviously can't management accounts without that would be pretty useless, but to make sure that it stacks up and that their answers have any questions that they ask have in fact been answered. You need to make sure that delegated authorities are still in place. You would not, as a general rule, be delegating some of the governance, for example, delegating payments to external service providers. And that would generally be kept in-house in accordance with your authority, which is provided to the bank, and you'd be doing things like making sure that two people would be signing off on payments at all times if you're using electronic filing. I'll come on to a bit more about in terms of governance and financial management a little later. And another question which has been asked here is, under CRA regulations, must a charity's policies be reviewed annually or from time to time as any changes arise? Some policies you do need to review every year. Other policies you wouldn't need to review every single year. I think good practice would be to do it every 2 or 3 years. But finance, I think that it definitely would need to be fairly high on the list, and I wouldn't be leaving it more than 2 years. And what I think is a good idea to have a management of policy, and what I've typically seen is a list of all of the policies, procedures in an Excel spreadsheet, the name of the policy and procedure, its reference number maybe, when it was last reviewed, and when it's due for review. So when it's reviewed, the date of the meeting, when it was in fact approved, and also who's responsible for actually drafting it or updating it. And that would typically be delegated by the trustees to the CEO or manager, who may in turn delegate it to an appropriate person within his or her staff. But to answer your questions, not necessarily every single year. However, I'd be saying that you need to keep it under review, and if you have a document which sets out what policies you have, when they were last reviewed, etc., it's a very useful way of keeping track. It's actually can be it can be quite time consuming to review policies and procedures and update them, in particular when it's not been done for some time. I joined the board of a charity a few years ago, and the policies and procedures, apart from the ones which were absolutely essential because of the nature of the beneficiaries, because it was a, you know, the making sure you're complying with legislation for safeguarding children, safeguarding adults, etc. Those kind of policies and procedures had been absolutely kept up to date and had in fact been reviewed regularly. But the other operating policies and procedures hadn't been, and therefore we set out a plan to actually review those over a period of time and to sign off on them, either 2 or 3 of them at every board meeting, until we'd actually caught up with them. Okay. And then as a board meeting, this is the next comment made here, regular accounts that seem to be in line with what the charity is receiving funds to do and roughly in line with the budget. I think should you be asking for bank reconciliation reports and have sight of the bank statements? What else should be reported at each meeting? Now, I think just looking at the bank reconciliation, I think it's a good idea, and bank statements, I think it's a good idea for somebody on the board of trustees for anything other than the very large charities, which would be covered by their staff members, by the finance director, financial controller, CFO, and other people who are involved in the finances. I think it's a good idea for the bank reconciliation report to be signed off by somebody who is actually a board trustee. I think this is from a practical point of view. I think it's a very good idea, and also to have sight of the bank statements. In the past, when I have been a board member for a very small charity, I used to go up every month and I used to help the manager to actually prepare the bank reconciliation each month, and I would check the transactions then, and I would sign off the bank reconciliation with the manager, and then we would report to the board as a whole that this is what we had done. And again, that's very important, is reporting that kind of thing, because then they know the work which has been done, and it gives comfort. And asking with regard to, it seems to be in line with what you're receiving the funds to do for this particular charity, roughly in line with budget. One of the things that you do have to prepare for funds that you receive is a report to the funders. And again, to my mind, with regard to financial policy and procedure, that should be something which is brought to the treasurer or to the person on the board who has particular financial experience. And I've seen a lot of financial policies and procedures where this is a requirement, so that the report is signed off by both the manager or CEO and also a member of the board. And that gives you comfort with regard to the fact that the funds are being used for the purposes for which they've been given. And it's very important that your accounting records record that appropriately and accurately. This is coming back to the proper books of account, and that and you're checking against budget, and that there's a report which is given as part of the management accounts package each month or each quarter, which indicates that the following returns have been made to funders, that these have been signed off, that there are a number of anomalies or whatever the explanation is for variances within the management accounts, which I hope that what else should be, and it's a case of asking, have these things been done? Okay, next question is loans to stroke from trustees to the charities, related parties. What section covers this area? You wouldn't be making loans to trustees as a registered charity. I would have thought that's prohibited. If there's a legal person in the audience, they can correct me if needs be. Related parties, there is a section within the Charities Amendment Act which actually lists out who are related parties. Of course, until the commencement order has actually been taken effect, the Charities Amendment Act hasn't got legal status, and as I said earlier, it's probably going to be after the general election before those commencement orders are in fact rolled out. Not to delegate payments to outside contractors should be kept in-house. I don't think it's a legal obligation. However, from my point of view as an accountant, as a chartered accountant, I would consider it to be, I would not feel comfortable being the only person signing off on payments. The exception to that would be if you delegate your payroll to an external payroll provider, and they may well schedule the payment to the members of staff, but that should be after the payment list has been approved by the appropriate person within the charity, and then it should be checked by somebody in-house as well. And this is sound internal financial controls. Responsibilities in unincorporated association. Now, if you're a registered charity, these responsibilities apply in the same way. If you're an unincorporated Charities Act applies, but the Companies Act does not. If you're an incorporated charity, both the Charities Act and the Companies Act apply to that particular charity. And these financial responsibilities apply to both unincorporated and incorporated charities if they're contained within the Charities Act, the Governance Code, the Charities Governance Code. And in fact, it's about sound financial stewardship. Okay. So that's all of the Q&A, I think. But as I said, I could talk about finance for a very, very long time. And thank you for asking questions. It's a great opportunity to. Okay. So it's saying here that if you have a qualified accountant as a trustee, they're allowed to prepare management accounts, even though they have a role in reviewing same. They're barred from preparing and submitting the full set of financial statements to the CRO. I would assume, as goes against the code, external auditor or accountant would be required. Absolutely, you'd have to have an external auditor or accountant, external auditor to actually audit your annual financial statements. If you have a qualified accountant as a trustee, they can of course prepare the management accounts and answer all questions which are asked from other board members or trustee members, and make sure that those questions are answered, but they can't be doing the audit. Just to say to you that if we end up with lots and lots of questions answered, I've got no problem whatsoever with dealing with those, because this is the introduction to board, but it may well mean we don't get all the way through the presentation I've prepared. However, you will have copies of the presentation, which will give you more information there. Okay. So operating policies and procedures. I can provide a list of the recommended operating policies and procedures. That's no problem at all. Okay. So I've got on my list so far a sample financial policy and procedure, and also the operating policies and procedures as well. Okay, no problem. So now chat box. Somebody said, should a director of a CLG whose company does not comply with the Companies Act be refused a mortgage? I don't know. I'm not a banker. I'm not a legal person. I think that there are regulations with regard to qualifying your qualifications to be a charity trustee, one of which is that you're an undischarged bankrupt, that you can't be a charity trustee. Other regulation is you must be over the age of 18. With regard to being refused a mortgage, I don't know the answer to that. If anybody does, please do share that with everybody. That'd be great. Okay. So then I have a question again. Should a landlord of a premises rented on a board have access to the banking system? Or is that a conflict of interest? We're talking about somebody who's a landlord who's actually on the board of trustees and is renting the premises to the charity. I would have thought you would need to make sure you've covered that within your conflict of interest policy. You definitely need to consider that when you're considering whether or not to rent from that particular individual, and also whether it's a connected person, whether that needs to be reported on in your annual financial statements as well. Okay, so it is landlord who is on the board. Should they have access to the banking system? I would have thought not to be paying their own rent. No. You'd always need at least two people making payments on the generally it's the electronic system nowadays as opposed to checks. You definitely need two people to be authorizing payment, and in my opinion, if the landlord shouldn't be authorizing their own payment, because that would present a conflict of interest if they are actually paying themselves. And I think that would be very poor practice. And again, that should be covered by your financial policy and procedure too. Okay. Right. I've covered all of the questions in that case. So we'll go back to here now. Okay. I do want to continue on a little bit with regard to the Charities Amendment Act just so that you've got an inkling as to what's coming down the track. If you're a company which is a registered trustees, your annual financial statements, your annual accounts, your audited accounts, I'm using all three terms because they're all the same thing. They must be prepared in accordance with the Companies Act 2014 and any additional regulations that might be made by the Minister. For organisations, registered charities which are not companies, they're divided into three different categories. One is the smallest category, which meets 2 out of the 3 conditions, which are listed below, and they're exempt from the requirement to prepare annual accounts or annual income and expenditure account and statement of assets and liabilities. And they don't need, the indication is that under the Charities Amendment Act of 2024, they will not be required to file accounts with the charity regulator. That's what my understanding is. Again, just to reinforce the fact I'm not a legal person, I'm not a solicitor, but that's my understanding. And the 2 out of 3 conditions are where your balance sheet is below 10,000 or such greater amount not exceeding 50,000, where gross income is under 10,000 or such other amount not exceeding 50,000 and you have no employees. So it's 2 out of those 3 criteria where that particular item would apply. Where your gross income or total expenditure is under 250,000, the trustees may decide to prepare an income and expenditure account and statement of assets and liabilities instead of preparing an annual statement of accounts. So it's a much restricted presentation as opposed to the full-blown annual financial statements, annual accounts. Bear in mind, I'm talking about not companies now. We already talked about companies. Where gross income or total expenditure is over 250,000, they have to prepare an annual statement of accounts. And this is where compliance with the charity SORP will come in as well, once those commencement orders have been passed by the Minister. Okay. Education bodies and centres for education are exempt. And this piece here is very important because it says the Minister may prescribe the form and content of financial statements. And this is to allow the Minister to prescribe that charities over that size, over that 250,000 threshold, which is the expected threshold, to decide that registered charities whose income or expenditure on an annual income or expenditure must comply with requirements of FRS 102, the charity SORP, when producing the annual accounts or annual financial statements. I'm going to come on to the charity SORP briefly in a moment. What are educational bodies and centres they're exempt from the requirements, those reporting requirements, because they're dealt with separately. There's financial reporting requirements. Okay. Advice on credit control of credit card for purchase. You definitely need to have a policy with regard to who's authorised to use your credit card. What I've seen in practice is that you'd only give a credit card to somebody who's actually named as such. You'd only apply for credit cards under particular circumstances, and that would be authorised. Applications would be authorised to particular individuals in accordance with your financial policy and procedure. What I've seen that works in practice very, very well is that there's one person who holds a credit card and that purchases are made on that credit card on application to that individual, or if it is a case where that's not going to be, it's going to be too unwieldy, that anybody who has a credit card has to make sure that they prepare a spreadsheet which lists out what they've spent as they're going along, and that they send that together with the supporting documentation to somebody in finance who's responsible for checking that everything has been properly accounted for and that only authorised amounts are actually been spent and the unauthorised amounts have not been spent. So somebody hasn't used the credit card for their own personal use, for example, and the credit card policy, which you should have in place, would actually make it very clear what the boundaries are with regard to what you can use that credit card for and what you can't use that credit card for. Okay, some charities have debit cards, and they have a system so that you can so that somebody within accounts is automatically notified if the card is actually used. Notifications are given. Okay. Okay. Now I hope that, as I say, there's a guidance. There's a link which is to charities regulator there in terms of conflict of interest. There's a very useful guidance document there, which is very comprehensive on the CRA's website. Okay. Yeah, and there's the CRA guide on credit card control as well for charities that you can refer to. The important thing is that you make sure that your policy is in accordance with that guidance and it's actually applied in practice. And you make sure that people who misuse their credit cards have the credit cards taken away from them as well. And that they have to make sure that they reimburse anything if they've used their credit cards for personal use as well. But that would be covered by your policy. Try and have as few as possible. Have as few credit cards as possible, because they are pretty risky, and the regulator sees them as being, the potential for risk is there. Now, moving then to the Companies Act, and the Companies Act refers to adequate accounting records as opposed to proper books of account, which is under the Charities Act. There's an obligation to keep adequate, that correctly record and explain the transactions of the company, that enable at any time the assets, liabilities, financial position, and profit or loss of the company to be determined with reasonable accuracy. They enable the directors to ensure that any financial statements of the company comply with the requirements of the Companies Act 2014 and accounting standards, and enable financial statements of the company to be audited. Now, I just want to say here, just explanation in terms of assets. What assets are what you own or what is owed to you. And they're divided between fixed assets and current assets. Fixed assets are those assets which are purchased, which are going to be used for quite a long time, more than 12 months. So, for example, it might be IT equipment, it might be furniture, fixtures and fittings. It would definitely be a building if you own a building. They would be fixed assets. Current assets are those which are more short term, such as your bank balance. If you have money in the bank, that would be a current asset. If you're owed money from somebody who you've sent a sales invoice to, that would be owed to you in the short term, and therefore that would fall under current assets. Liabilities are what you owe, and it's the opposite of assets, basically. And again, you can have long-term liabilities and current liabilities. Current liabilities are those which you will be paying within the next 12 months, the short term. Long-term liabilities will be more than 12 months. So if you have a bank loan, for example, for a 5-year period, 1 year of it will be current and the other 4 years will be long-term liabilities, the amounts that are going to fall due for payment. Liabilities would include things like PAYE, PRSI creditors due to revenue. If you have a bank overdraft, that would fall under current liabilities as well. Okay. Financial position is basically your summary of your assets and liabilities at a particular point in time, or your balance sheet, which would summarize your assets minus your liabilities, and then the net figure, which is your net assets, would correspond with the reserves which you've built up since you started as a charity. And then the profit or loss of a company, that's the difference between your income and expenditure. So your profit would be where your income exceeds your costs. Your loss would be where your income is less than your costs. But that would go into a profit and loss account, and that document would go into your management accounts as well. This is what the Companies Act says, bear in mind. And it's a similar thing in terms of proper books account under the Charities Act as well. Keep your accounting records for at least 6 years, if not 7, and make sure that your accounts give a true and fair view, which are based on that. So, okay. Let's see if there are any more questions. somebody said they've recently outsourced their payroll to an organisation. They provide a list of employees and request we sign off before any payments. That's great, absolutely great. And if you've authorised them to put the payment through, that's not a problem. I've been board member myself on one charity who actually did that, and they authorised the outsourced payroll provider to put the payment through. However, you need to follow up and make sure that the payment which has gone out is in accordance with the information that you're provided with. And before signing off on that list of employees, you need to make sure that you've reviewed it to make sure it makes sense and stacks up. So, financial reporting, I want to talk about the main types of financial reports as well. Generally, you'd have your financial statements, your audited accounts, your annual accounts, and management accounts. And there's a summary here as to the different purpose, so that your financial accounts, for example, your financial statements, are primarily for external users, they're for stakeholders. They're prepared annually, and you have to prepare them. They're required by law that you prepare your annual financial statements, okay? And they focus on the past and, up to the date that you sign off on those annual accounts, where you're actually checking where things are at the moment to make sure there's nothing happened since the year end, which creates, which would impact on the finances of the organisation, in particular in an adverse way. They have to be presented in accordance with legal and accounting requirements, and this is where the charity SORP comes in. When it becomes compulsory, there is a format included within the charity SORP which sets out how the annual financial statements should be presented, in terms of what should be included in the trustees' annual report, for example, the format of what is going to be called statement of financial activities. It already is called statement of financial activities, which is the income and expenditure account, and also the format of the balance sheet and the cash flow for large charities, i.e. those whose income is more than 500,000 are classed within the charities SORP as large. And then you have various notes to the accounts, and there are also various disclosures which are included in the charities SORP, which must be made if you are going to comply with the charities SORP. Okay, and who looks at them? Board members and external users, stakeholders. Management accounts are the alternative type. There's also the third type, which is your reports to funders, which I'm not discussing here. So the management accounts of the charity are the detailed accounts which are used to control the organisation and to plan for the future. They're produced either monthly or quarterly. It determines what suits the organisation best. My own view is at least quarterly. I don't think it's very useful in terms of managing your finances if you get them any less frequently than that. It's good governance, good practice to have management accounts, and quite honestly, I don't see how you can manage the finances of an organisation without management accounts. It includes budgets, forecasts for the future activities, and it also evaluates past performance, and in particular recent past performance, because you'll be comparing your income and expenditure account, for example, possibly against last year, possibly against your budgets, definitely against your budgets, and you actually explain any differences between this year and last year, and this year and the budgeted amount, or what you're expecting to have. And the most relevant for you do customized designed reports, although to be fair, your income and expenditure account would generally list your income, list your expenditure, which would give you your surplus, hopefully, or your deficit for the period. And the balance sheet would be your assets, your liabilities, etc. And then you have your reserves, your accumulated reserves at the bottom. And they're produced for board members and also for management. And again, as I said already, so you can manage the finances of your organisation. Okay. Where should all the required regulatory records be kept? They may be kept on software package. My understanding is that so long as you actually have copies of them in soft copy, that's okay. You don't have to have everything in hard copy. Some organisations possibly do keep everything in hard copy. But I'd be moving across to soft copy. And in fact, some of, you can scan documents and you can keep them for at least 6 years, which would satisfy that requirement. Okay. We're going to talk about reserves a little bit. Somebody's asked, when is SORP going to be mandatory? It is expected that it will become mandatory for accounting periods commencing on or after 1st of January 2026. But until those commencement orders are actually put in place, we don't really know for sure. I've actually been saying this for at least I don't know, since 2016, if not before. I was CFO prior to that for a charity, and I wanted to bring in SORP because it was recommended good practice, and it wasn't. Somebody's asked, why is it 6 + 1 year rather than just 7? It says 6 years in, I think revenue requires 6 years. I actually think, personally, I think you're as well to wait for 7 years, just in case something comes up within 6 months of the year end of year 6. General recommendation to have for reserves. It depends on your organisation, to be quite honest, in terms of how much you'd have in reserve. I personally think you need at least 3 months core costs. You run into difficulties from a practical point of view sometimes with your funders, but we'll talk about reserves a little bit later on, okay? And there is an extremely good guidance document on the Charity Regulator's website with regard to reserves, which sets out how you can calculate what are known as your free reserves, which are those reserves which are available to go into a reserve. And that's made up of your total reserves minus your restricted reserves, minus fixed assets, minus anything which is unrestricted, i.e. it's been set aside, but has been set aside for a particular purpose. And that calculates the value of your free reserves, which is available to go into a reserve. And then your policy may well be that you have 3 months core costs as a reserve. And if you compare that against the value of free reserves, you might find there's a shortfall there. And therefore you'd explain that in your note to the accounts and explain what you're doing to try and bring up the reserves so that you do have that 3 months available as free reserves. Hope that makes sense. Okay. But use its reserves. My understand that there is a requirement. I'm going to mention these things now in case we run out of time. But with regard to retaining your CHY number, if you have a CHY number, which means that you're exempt from certain taxes, income tax or corporation tax primarily, the revenue, strictly speaking, you should be writing to revenue if you have more than 2 years in reserves. My understanding is that under the Charities Amendment Act, when it does take legal force, that is going to be extended up to 5 years. Again, I'm not a solicitor, but that's certainly my understanding of it. A lot of organisations may not think to advise the revenue commissioners and to ask for permission to keep their CHY number, even though they have such a high level of reserves in place. But it's certainly something that you need to know as trustees, because of course you need to know all of your legal obligations and just to keep an eye on it. Similarly, you need to make sure that you're advised that you still have tax clearance in place as a board at least once a year, because again, that's keeping the board informed. Okay. There is a slide right at the end in terms of tax, but whether we'll get onto it or not, I'm not entirely sure, but I'll cover as much as I can. I'll talk as quickly as I can as well. Okay, somebody's about reserves. what needs to happen before going into reserves, best governance and steps. You need to review it. Somebody needs to be asked to review the reserves policy each year. Certainly when I've been on the board of charities who have had a reserves policy because they had to have, that they wanted to have a reserves policy, and they produced their accounts in accordance with SORP, which requires that you have a reserves policy. Myself and one of the other directors, who was a financial person, would write a draft reserves policy and would also do that calculation in terms of free reserves. And that it needs to be minuted in the board meeting where it's discussed, and where that reserves policy is discussed, and also where the reserves policy is approved each year. Okay. Okay. I shall leave the one about where somebody's saying it's maybe better for another theme this week. I'll leave that. Yeah, again, you need to, again, there is a certain amount here in terms of payments. You need to have a procurement policy, and you need to make sure that purchases are made in accordance with that procurement policy, and spending decisions, proposed spending you feel could be done differently. Make sure that you've got policies in place in terms of at what point do you put a purchasing decision out to tender to 3 or more organisations? At what point are people authorised to make spending decisions? Should always be done on the basis of best value for money, and that should be covered by your policies and procedures. Disagreements about it, I think that's something slight. I'm not going to comment on that, possibly with mediation. Now, somebody said, could I post the link for that, please? What is that? Which one are you talking about? Are you talking about the reserves guidance document? Okay. And then Director of Finance, previous extensive experience in corporate, how would you support for charitable governance? Are there courses? Absolutely, there are courses with regard to charity governance. I know that the Wheel runs courses, and I know that Carmichael run courses in governance as well, and there are other organisations who run governance courses as well. That's something you can maybe follow up on as well. Okay, now I've got 10 new. I'm going to go through them all. Can the chair of the Finance Risk and Audit Committee be a non-board member? My own opinion of that is that generally, I wouldn't say it's a good idea to have the chair of the Finance Risk and Audit Committee to be somebody who's not a board member. I think that most terms of reference for the subcommittee would in fact require that it is a member of the board who is the chair of the Finance Risk and Audit Committee. Generally, your terms of reference do say that the chair of the board cannot be a chair of one of the subcommittees. If it's somebody with a non-professional financial background, I think I've kind of answered it in terms of it isn't a board member. It doesn't mean that somebody cannot be on the Audit Risk Committee who is not a board member. They can be there as an advisor. That's fine, providing your terms of reference permit that. The restate where to find the reserves equation, that's in the guidance document for reserves, which is on the CRA website. The slides will be available afterward. And as I say, links to the reserves, and somebody's put a link into Carmichael as well, and there's also a link to the Wheel, which has been put up in the Q&A box, which I hope everyone can see. And Board Match runs some very good courses as well. They do, absolutely. I don't think the slides are going to be on the Wheel website. They'll be on the Charity Regulators website and also be emailed to you as well. Okay. I think we're getting a lot of very practical issues today, which is great. Now, the charity SORP. Before we move on to that, though, I just want to mention actually, I won't. No, the charity SORP, Statement of Recommended Practice, it's recommended best practice. It's been mandatory. There are 4 jurisdictions which are covered by the SORP committee, who manage the development of the charity SORP. And there are representatives from England and Wales, Scotland, Northern Ireland, and the Republic of Ireland on that SORP committee. The other 3 jurisdictions, compliance with the charity SORP is already mandatory. It's only Ireland where it is not mandatory, and that's expected to change, as I've said already, on foot of the Charities Amendment Act coming in. Recommended best practice. Some funders already require that that the annual accounts, the audited accounts, are prepared in accordance with the charity SORP. There is, as I say, the SORP sets out the format of the annual financial statements, and hopefully this is going to become mandatory for accounting periods commencing on or after the 1st of Jan 2026. It's expected to, there's a revised version of the SORP, which is not a huge amount of variances as far as I know, which is expected to be issued early next year. And again, it was we've been waiting for the Charity Amendment Bill Act as much as anything else. What's contained within SORP compliant annual report, which is, it's confusing because the annual report is often used by charities for the annual report which they produce, which sets out outcomes, etc. And it's contained on the website. The SORP refers to an annual report, which is the annual financial statements, the trustees' annual report, and the auditor's report as one collective item. They're all put together, yeah? And so that's what comprises the annual report under the charities SORP. And under financial statements, you have statement of financial activities, which replaces the income and expenditure account, although companies may well, or organisations may well apply or decide they're going to call it income and expenditure account. The SORP refers to a statement of financial activities, which is the income and expenditure account. Statement of financial position, which is the balance sheet. Statement of cash flows, I've already mentioned that that's for organisations or for charities whose income is over 500,000. That's what's classed, that's the cut-off point or starting point for a statement of cash flows, and then also the notes to the accounts. The SORP introduces the concept of fund accounting, which divides, and to be honest, the charity SORP, you could do at least half a day as a separate training session. I'm just giving you the real headline information here because somebody I know, one of my friends, went on a financial course, and she said to me afterwards, I was sitting there for 3 hours waiting for them to tell me what the SORP was, and nobody mentioned it. So I decided that for any of the sessions I do, I make sure that I tell people what the SORP is. So the reserves of the charity are split into 2 different types of fund. The unrestricted funds, which are those which are given to the charity or which the charity receives, and there are no particular conditions attached, and they can spend those funds on anything providing it's in accordance with their charitable activities and complies with their constitution for the public good. Okay. Unrestricted funds can be divided into 2 subcategories. One is general funds and another one is designated funds. And what designated funds are those funds which have been set aside for a particular purpose or to pay for a particular thing. So, for example, if you're saving up to renovate a property, it may well be that you're setting aside money out of unrestricted funds to meet those commitments when they fall due. And you've ring-fenced money as a designated fund. The trustees can release those funds if they so wish, if they decide they need the funds for something else, the normal activities. So just be aware of that. But there are 2 types of unrestricted funds. Restricted funds are those which are given to the charity and must be spent in accordance with the conditions which are imposed by the donor or the funder. And those are restricted funds. And you don't have a choice as to, I mean, it's obviously going to be for charitable activities, but it must be spent for the purpose for which it was given. Again, when I was in a charity, we were given a grant every year or funding each year from the HSE to part pay for a nurse's salary. And that's all we could use that money for. So if we'd run out of money and we needed to pay somebody else's wages, we weren't allowed to use that particular funding because it was given to us purely and simply to pay towards the nurse's salary. So that's all we could spend it on. And that's an example of restricted funds. And again, restricted funds are those which they're divided into two types. One is restricted funds, one is endowment funds. And endowment funds would be those where you receive them for the long term. And again, there are conditions attached. I'm not going to go into that in a huge amount of detail now, but just be aware that they do exist. And okay, so that's okay. Okay, then I'm just picking up any questions, etc., before we move into financial management. I actually think we talked a lot about that. A reserves policy template. Yeah, it's I can certainly make sure that that's sent over. I'm saying this, I know that I'll send them over to Matthew and he'll forward them on as needed. There is one, and it's also contained within that guidance document issued by the regulator. Oh my goodness, what's the position with the charity that started to import supplies from the EU to sell on to other charities and businesses? I'd have to really I think I'd need a bit more information about that really before answering, I'm afraid. May well be that somebody who's a VAT expert might need to be answering that question. So sorry about that, Breda. Something about SORP and restricted and unrestricted funds. I think I've said that now. I hope that's okay. And somebody's saying, is it legal for a charity trustee to provide an interest-free loan to the charity to cover a shortfall in funding? Oh my goodness. I'm not sure about that. I know directors are permitted to issue a loan, loans to a charity. If anybody else knows the answer to that because they've come across it, please do share that reply. I have come across it where a trustee has in fact provided a loan to a charity, but I'm not sure about the legality of it. I'm sorry. And then there's somebody who said, if an organisation is buying goods or services from a supplier over 38,000 and they're not charging VAT, is the onus on the organisation or supplier to ensure this is correct? I would say that it is important that you find out what, certainly when I've been working in a charity as CFO or indeed a director on the board of charities, and somebody has provided quotes because they would provide a quote for expenditure of that sort of value, I would always ask the question, does that include VAT? Because quotes don't always include VAT and they're not always clear as to whether or not VAT is included or not. And if somebody comes back and they say, no, it doesn't include VAT because it's not applicable, I would actually say, have you confirmed that? Are you absolutely certain about that? Have they given you a written indication that VAT is not applicable? I would be I'd be wary enough because if as a supplier, if they need to be registered for VAT, they need to be registered for VAT if their sales are above a certain value, and that's the end of it really. But the onus is also on you to make sure that you've checked it out. Okay. Right then, financial management policies and procedures is the first one that I've indicated there. And I think I've talked about that enough already. Having budgets is very important. As I say, approval of the budgets is something which is reserved for the board. Insurances, that we've already talked about that under the Charity Governance Code, you have to have adequate and appropriate insurances in place. And we've talked a bit already about the management accounts as well. This is all part of financial management. Okay. Somebody's here said, aware of a situation where a trustee gave an interest-free loan, is paid back in 3 years, and they were unable to find anything which said it was illegal. So there is the answer there to the question. Thanks very much indeed for that, John. Charity's mandatory report accounts on sustainability reporting. I would have thought that if you're a company, yes. So I would say that there is that requirement under accounting regulations. So I would say so. Okay. Now, internal controls, we've touched on this already as part of the discussions that we've been having. They're systems of controlling and monitoring expenditure, and it actually goes further than expenditure. It's also about your resources, making sure you have a register of fixed assets, for example, making sure you have a register of the numbers on your IT equipment, and you have a log of that. So it goes beyond just finance. One of the internal controls is actually keeping your accounting records and maintaining your accounting records, keeping them up to date. Benefits of having appropriate internal, one of the benefits, should I say, is it prevents and detects fraud. I do think that if somebody's determined that they're going to commit fraud, if that's what they're about, fraud might be internal, it might be external. And what I would say to you is that you should have a fraud prevention and management policy as part of your suite of policies, of written policies. Another internal control is making sure that you have defined the roles of everybody within the organisations, that people have a job description if they're employees. You should document policies, and even though the governance code doesn't require necessarily written policies, I firmly think you should have them written. I've said that already to you. Helps to safeguard assets. And this one here at the bottom here, segregation of duties, I think is absolutely essential. And the principle, there's another principle as well of internal controls, which is authorization before purchase. And that's very important. So you must make sure that all purchases are authorized in accordance with delegated authorities before you actually purchase the items. But segregation of duties is different in that the principle there is that you never would have just one person involved in a financial transaction. You would always have a minimum of two. And that way, by having at least two people involved, you're protecting the people who are involved, you're protecting the organisation as well. So that's the principle of segregation of duties. And again, there's internal financial controls guidelines for charities, which you can find on the CRA website. I mentioned talking about tax matters. I've got just 2 slides, and I'll come back to the questions if that's okay. That you can apply for exemption for income tax. That's your CHY number. And there are certain conditions attached there if you're going to have a CHY number. You must register as an employer if you employ people and apply the PAYE rules. Expense claims must be in accordance with approved mileage and subsistence rates. You can't be paying more than that. And in fact, a lot of charities pay less than that when you're looking at mileage rates, which are actually paid to people. There's the VAT compensation scheme. I'm not going to go into that because so few organisations actually benefit from the VAT compensation scheme. But under it, you can apply for qualifying VAT to be refunded, and you only get a proportion of it. So in practice, that hasn't benefited many organisations a huge amount financially. Tax refunds for donations received. Donations must be more than €250, and they must not be connected with a benefit to a donor. So they must be given as a bona fide donation, and the refund is processed in the year following through ROS. At the moment, you have to have had a CHY number for at least 2 years, and my understanding is that under the Charities Amendment Act, when the commencement order is commenced, that 2-year period will no longer need to be complied with. It will be, once you have a CHY number, you're okay. But again, until the commencement orders are in fact passed, I don't know for certain, but just to give you that sort of information. Okay. Charity Register, you must file your annual report within 10 months of the end of the financial year, and you must make sure that your details are absolutely up to date and keep those details on the Charity Register up to date. And then there are various, this is just examples of the various financial guidance documents which have been issued by the regulator. There are others now on the Charity Regulator's website, but there is a link here to the Charity Reserves guidance document, fundraising, which I mentioned before, the internal financial controls. I've included anti-money laundering and counterintelligence. As somebody already mentioned, there is actually credit card guidance as well. There's guidance documents there. There's a wealth of information there. I'm just going to check the chat. And everybody who said thank you, you're very, very welcome. And I will send on the information as well. Okay. Regarding the loan, somebody's looked at the AI assistant, and Charity Trustees can provide an interest-free loan to their charity, but there are important legal considerations to keep in mind. Governing document must permit it, of course, yeah, it stands to reason that your constitution must permit such loans, and you must have thought about conflict of interest as well. Make sure you're acting in the best interest of the charity. Regulatory approval in some directions might be required, and the repayment terms must be, you need a proper document as well. So thank you for that. Okay. Just going to check that there's nothing in the Q&A as well that I haven't covered. And I think I have. And somebody said, as part of the regulator, every trustee must separate their ownership of rights, and that includes all financial supports or gains. I think that if you're looking to make a loan from the trustees to the charity, you need to probably take legal advice if you don't have it covered already, because there are some contradictory items which are coming up there. Okay. There we go. Somebody's asked, what are the taxes rates? VAT would be the main one that you'd be impacted by, which would be dependent. It'd be the rates which are in force as at any particular time, for example. So 13.5%, perhaps 23% is the standard rate of VAT. Some supplies are either exempt or zero rated. So if you're a charity, you cannot reclaim the VAT as a matter of course. As a general rule, you wouldn't be registered for VAT unless you're actually making vatable supplies yourselves, in which case you'd have a partial VAT, you'd be partially impacted. PAYE rates would be the ones which are in place as they are at the moment in terms of the PAYE, the PRSI, employees PRSI rates, employers PRSI rates, so they'd be quite standard. Okay, what is the system for per diems? What do you mean by that exactly? What the nature of those payments? And I shall try. Yeah, somebody here has said seek independent advice with regard to loans. I completely concur with that. Okay. So we've run over 5 minutes. I'm going to stop sharing this. And so I'm going to try and stop sharing with them. So thank you so much for thanks so much for coming along today. Really appreciate it. I will send on the information to there we go. I'll send the information over to Matthew so that he can share it with everybody. Sort of talk about your name in vain there. But I am assuming that's the best way to get things over to people.
Absolutely, yeah.
Yeah. And as I say, thanks very much indeed for you paying attention. Sorry, I've gone 5 minutes over, but I thought it was really important to answer all those questions. And I hope I've managed to answer all of your questions and to set you up for when the Charities Amendment Act does in fact get all of those commencement orders, because there's definitely going to be more than one. There are going to be a good few of them, I would imagine, because there are a lot of items which will need commencement orders which are not to do with finance as such. And there are within that within the Act, for example, there's going to be a definition of who the members of a charity are. You need to keep a register of your members, etc., which isn't the case at the moment. It is for companies, but not for non-incorporated. And duties of Charity Trustees is going to be covered in more detail, who the members are, definition of Charity Trustees. I'm actually using my crib sheet here. Advancement of human rights is going to become a charitable purpose as well, which I think is great news. But that will come, and no doubt there'll be presentations which will be being offered to people so that you can actually be informed about those in more detail as well, and webinars which will be available for everybody. What I would say to you is, with regard to SORP, prepare sooner than later, because even breaking down your funds between restricted and unrestricted does take time, because you do have to go back. And the other thing I'd say to you is there will be details with regard to what the SORP is going to require, who's going to be required to have an audit, who'll be able to have an examination accounts, which hopefully is all going to be made clear when all those commencement orders are actually rolled out. Because for smaller organisations, those with income below the 200 or expenditure below the 250,000, they will be able, when the Charities Amendment Act becomes law, to avail of an examination of accounts, which will be a less onerous examination of accounts than a full-blown audit. It'll still need to be signed off by a professional person, though, the annual accounts. Okay, so as I say, thanks very much indeed for your attention. I think it's time to wrap it up now. Okay.
Absolutely. Thanks
Thank
so
you.
much, Andrea, and thanks everyone for joining us this morning. And we'll be sharing the recording slides and all the bits with everyone hopefully later today.
I'll get
And
the bits
thanks
to you
again.
next week, Matthew.
No problem at all.
Okay.
Thanks, everyone.
Bye, everybody.